This is your LMAX exchange technical update for Thursday, April 6, 2017. Euro dollar. So euro setbacks have now been very well supported into this key range between 105.80 and 106.50, which represents some Fibonacci and Ichimoku cloud support. At this point, the market could still find a higher low ahead of that key support, that previous low at 104.95, going back to February in favor of the next higher low and fresh upside extension back above those recent highs, just over 109. At the same time, if the market is unable to hold on to these gains and we see additional declines establishing back below 105.80, this would suggest a more meaningful bearish resumption, potentially exposing a break below 104.95 and down towards a retest of that 2017 low at 103.40. Sterling dollar. So cable rallies continue to be very well capped into this critical resistance area up towards that December 2016 peak at 27.75, and until we see a break of that level, the overall pressure remains clearly on the downside, and there is risk for another downside extension back towards that 2017 low at 1987, which guards against the critical 2016 October plus 30-year low down at 118.40. But for now, we would need to see a break back below 23.77 to strengthen the bearish outlook and accelerate declines. Dollar yen. So dollar yen is consolidating following a break below significant support, that multi-day range low at 1160, following a period of consolidation for several weeks between a 111.60 and 115.60. That 400-point range that was broken now projects a potential 400-point move to the downside, which would take us down towards 107.60. Look for any rallies here to be very well capped, with only a break back above recent highs around 112.20 to delay the immediate bearish outlook. Euro Swiss. So despite a little bit of a bounce in recent sessions, Euro Swiss remains confined to a downtrend with a lower top now sought out at 108.26, which will be confirmed on a breakback below the 2016 low at 106.24, exposing a fresh drop towards the 104 area further down. Only back above 108.26 would compromise this bearish outlook. Aussie dollar. So Aussie remains pressure to the downside after stalling out once again up towards 78. The market now is focused on a retest of recent support at 74.92, with a break below that level to accelerate declines down towards next key psychological barriers at 75. Dollar CAD. So dollar CAD continues to be quite constructive, with the market well supported on dips. This most recent dip has been supported at 32.64, and the market could now be looking for an upside extension back towards and above the recent multi-day peak at 136 and towards 140 further up. Kiwi dollar. Kiwi continues to show signs of topping out over the past several months, and the market has now been very well capped into gains up towards 72, with a lower top sought out ahead of the next major downside extension below 68.62, which is some medium-term support going back to 2016, below which would expose a test of psychological barriers at 65. Again, any rallies now should be very well capped, ideally ahead of 72. SPX 500. The S&P 500 is in the process of consolidating following a recent pullback off the record high. At this point, the market would, however, need to see an additional breakdown below recent support at 23.20 to confirm the onset of a meaningful correction, which could then expose an acceleration and a possible measured move drop down towards next key objective at 22.70. At the same time, if the market is unable to establish below 23.20, this would suggest that we're seeing a bullish consolidation ahead of the next push to fresh record highs beyond 2400 and towards a key objective at 2485 further up. Gold. So gold has been in the process of basing out since 2016, putting in a series of higher lows and higher highs. This latest setback was supported at 1195, and so a break back above 1265 would confirm a fresh higher low at 1195, opening a measured move upside extension towards 1335, just shy of that 2016 peak at 1375. At this point, only back below 1180 would compromise the constructive outlook for gold.